Hey, good morning, everyone. Good morning, good morning. It's about 8:50 in the morning on the 7th of November, 2022. We have less than 2 months left in the year, and it has been a wild, wild year, hopefully wildly profitable for a lot of you bears out there. What I'd like to do is I'd like to kind of get us started off on the right foot. I want to take a look at a few things to kind of prepare us for this big week that we've got. A lot of things are happening this week. I want to talk a little bit about all of those. But before I get into any of this, as you all know, this is not financial advice. I'm not your financial advisor. You're responsible for your own trades, managing your own risk, doing your own research, and I'm just giving my opinion on the market. If you do need access to our trading room, you can find all that information on BitDoctor.org. Some educational materials. You can get access to our indicator that I use in all of my trading. And yeah, last but not least, let's go ahead and get on into the chart here. As you all know, I'm not an entertainer. I'm literally here for my purposes, which is to continue trying trading this market as profitably as I can. So that's exactly what I'm going to do here. Looking here at the market, I just want to point out a couple things. These may be obvious to you, right? So this chart, I've been working on this for the better part of, as the year has been kind of working itself through. I've kind of marked out our little our crosshairs here where we've seen, major pivots in the market that the indicator has fired off on lower time frames. We've been, getting short, quite a bit, and, looking to cover those short positions at the best possible time. So, looking at this, what I'm going to be looking for right now is divergence. And I think this is important to pay attention to. So a couple things that I'll make note of. What we've got here, and let me just go ahead and try and outline these as best as I can. So we've got a little bit of a low here, right? You can obviously see there's a pivot that occurred here. We have a lower low right here, then we have a lower low right here. Let's just take a look and see what the MACD histogram was doing at the time. So on the MACD, we had, with our low here, you can kind of correlate this with this pivot up here. We created a lower low right here, which was creating, a higher low on the histogram. And then it happened again. We had another lower low right here, although it only lasted for, just a very short period of time. I'm looking at the daily chart, by the way, and I'm looking at the ES. So this is the S&P mini futures. And with these lows that we were creating on the price, we were creating higher lows on the histogram, and that's what you really need to pay attention to. That just basically tells you that the moving averages are converging on each other, and that's what's causing this to occur. So the price action was below the moving averages, right? So they were in a bearish cross, which is why the histogram was below the zero line. But they were getting closer and closer to each other. And that is creating that divergence that we're looking for. And that's what has caused a little bit of a rally that we've seen. And of course, we've seen it 3 times, right? We had this pivot low here, we had a rally, and we shorted this. We had this low down here, we had a rally. And I honestly don't remember if we shorted this area. But then we had this low down here at about 3,500. I do know we were short here, and we got out of these short positions. And of course, we've seen, what kind of a push up have we seen there? So we've had this, basically we've had the S&P move up about 12% since that low. That's, that's a pretty decent run. That is a decent run. And that's right after we had these 2 big green days. And if you recall, everybody, all the news outlets, analysts, they were talking about that being like the biggest 2 days that we've seen in a very, very, very long time. And well, what ended up happening? Well, we shorted here because, those things don't last. We ended up turning that week into a pretty bearish week. We made, let me just go ahead and measure it here. We had the market that went up about 6%. By the time the week was over, it was only up about maybe 1.5% that week. And so looking at that, that's not all that great. That's not all that great. That big move up that everybody was talking about was almost completely absorbed. And of course, it did get completely absorbed by the next week. And then we've seen this little rally because we created that bullish divergence. All right, but now let's take a look at bearish divergence. What are we seeing as far as bearish divergence goes? All right, well, first off, what I want to point out here, from this high right here to this high right here, we had a lower high. Okay, let me just go ahead and change the color on this so that we can see it a little bit better. I'm going to make it a little bit wider so that it's easier and more pronounced for you to see, right? So we have a high here and we have a lower high here. Well, what happened with our MACD histogram, right? So when we're talking about bearish divergence, when we create a lower high on the price, we're wanting to see a higher high on the histogram. Did we see that? That would be about right here. No, we didn't. So there's no divergence there. Nothing to pay attention to. But let's just go ahead and move on forward just a little bit here. From this high right here to this high right here, this is what's really important in my opinion. All right, so we have a lower high on the price. And let's just look and see what the histogram is doing. We've created a higher high on the histogram. So this is what we're looking for from a bearish divergence standpoint. And actually, it's more pronounced because I actually took the wrong pivot. This is actually the pivot down here. If you can see my crosshairs, just follow it straight up. You can see that I'm lining it up correctly now. And this is even a more pronounced divergence. We still have that same divergence that I was just pointing out here because, again, we've got a lower high here. And then from this point right here, I'll go ahead and mark it right. We've got a higher high. This is bearish divergence. And we saw a good sell-off after FOMC last week. And so for that reason, a couple things that I want to pay attention to. I want to ensure that this high right here does not get taken out. Okay? This is basically our bearish control. That's our bearish control area. If we can maintain prices below this, then I would say that we're going to continue to see lower prices. Okay, we're still looking to create this Y down here. All right, so looking at it from the beginning of 2020, right? So we've gotten a little, ABC into the 1, ABC into the 2, ABC into the 3, ABC into the 4, and then we go down here into the 5. The 5, it doesn't look like an ABC to me. It actually looks like a 1, 2, 3, 4, 5 to me. But now that we've gotten there, right? So I'm counting this right now currently as a W and then an ABC into an X wave, which means we should be working on the Y. Okay, so if we're working on the Y, we're just kind of in an area right now where, obviously we've got the bearish control that's going to be right up here at about, and we're going to call it 3,900, right? 3,900, 3,910. On the ES futures, right, we're looking at about 3,930. But as far as the SPX cash index, we're really looking at about 3,910, 3,915 as an area of interest for a continuation to higher prices if we are to break it. But for right now, after FOMC, we had a good solid move down that day, right? So that was down 2.5% on the futures. And of course, we had a little bit of a follow through the next day. But then Friday last week was a little bit of a green day. And today so far has, it opened lower, but it did a gap fill. I do want to talk a little bit about some correlation with Bitcoin here in a minute because I think I've seen a positive correlation on Bitcoin. I think it's pretty important to point out. So I'm going to do that here in a minute. But I am seeing bearish divergence on some of the highest time frames. We're talking about a daily time frame here. So what does that mean? It means it can take a long time for it to play it out, right? And because of that, I'm being very careful. But what I'm looking at this being right here is the completion of an ABC. Okay, completion of an ABC. Couple things. We rejected the 618, which means our target is going to be at about the -236. So our -236 extension is right down here at 3409. We didn't quite get there. We saw a big bounce. So I believe we're actually going to go down here to the 382 extension, which is not as common, but it is a target. And it does correlate with the 100% extension. That's down here at about 3275, which is going to equate to almost 3250 on the cash index. So, and I took that, I derived that based off of, just so that you're aware, I got this high up here, this low right here. So this is be the completion of the W, taking it all the way back up to the X, right? So the length of the W pulled back to the X. We have a 100% extension that's right down here at 3275. Are we going to go down here to the 1236 at about 3050? Not likely right now. Not likely by the end of the year. It would be nice to get down here to 3,000 by the end of the year, but we're just kind of taking too long. We need to have some really, really solid consecutive down days in order for that to even become a possibility. But for right now, my target right now is going to be sitting right there at about 3260, as I mentioned. And looking at this, after this ABC, what I'm going to be looking for is a 1 and then a 2. And then working on the 3, we need to get to these lower prices. We need to create a new low on this to get down here to this 3260 area, where I think we're probably going to go by the end of the year. What we're probably going to do, we're going to see a lower low on the, we're going to see a lower low on futures, on cash index. More than likely, we're going to create a lower low. We're probably going to get a pretty significant bounce out of this. So we're going to create a major bottom here really soon. And have we already created that major bottom? I don't think so. Most major bottoms are created through some kind of a capitulation phase. It's probably going to look a little bit, just so I create a little bit of awareness here, it's going to look a little bit like this guy right back here that we saw in June, but it's probably going to be a little more pronounced, okay? So, now that we're up here, we're working on this 3, right? So we do something like this, and then we're going to see a pretty significant move to the upside. I do think we're going to see a really big bounce going into next year. And between you and me, I think it's probably going to last going into maybe April. So we're looking at a good, solid, at least 4 months of a solid up move. We're going to create a really significant pivot, and it's really going to catch a lot of bears by surprise. And who knows? Maybe I'm going to be caught by surprise this week. Maybe we're going to break that level, and we're going to go up to that 4,100 area. I give it a pretty low chance of probability. I think we're going to see a continued move to the downside here, but that's kind of where I'm positioning myself right now, looking for that move to the downside to finish out the year. Now, what that means, though, is that we have a good solid 6 to 7 weeks for that to play itself out. So you need to be really careful about how you're playing that. My opinion is, and has been for quite some time, that some of the best ways to play this is not by using options, right? Because, you're using options, you have decay that's working against you. Some of the best assets to use for this are some of your inverse ETFs, right? So you've got SQQQ, SPXS, SPXU, whatever your flavor may be, and there's even bear ETFs for some of the big names out there, like for Apple and for Tesla, and we've even played some of those. I do think that Apple is going to probably one of the next to fall, because a lot of the major the heavy hitters on the S&P 500, they've already broken their lows for the year, and Apple hasn't really budged a whole lot. I do want to take a real quick look at Apple, though, and I'm looking here at the daily here on Apple. We had a significant move to the downside, and we even almost saw some bearish confirmation on Friday, whereas the broader S&P 500 was actually green. Right now, Apple, there's some negative news out there. You use whatever excuse that you want, but again, we're also starting to see that bearish divergence on here, and it's basically starting to play out. Let me just go ahead and clear some of this off here. And let's just kind of take a look at this. We have a major pivot point right here, right? You can agree with me, that's a major pivot. And then here's our next major pivot. And well, from that alone, that's this guy right here. We've got this bearish divergence. And of course, that, maybe that's already played out. So hindsight's 2020. But also, I want to point out the fact that we did have a lot of bullish divergence moving up into it. So just to show you that divergence can last a lot longer than you would expect, that divergence is bearish divergence, and it lasted, a significant period of time. It lasted from July 7th through August 15th. So about a month and a week it took for that to work itself out. So we've seen, significant bearish divergence. It started to play itself out. It could be that we're going to continue to see that for at least the next month, right? It's going to take some time for that to work itself out. So that's Apple. I think that Apple has the potential to move significantly lower from where we're at, right? Of course, everybody likes to pay really close attention to gaps. The biggest gap that we've got is right back here. That's going to be at about $96, $100, somewhere in that range. If we start to break through some of these, I do believe that's probably where Apple is going to gravitate to try and kind of fill that gap. We have a little bit of a gap right here as well at about 111. So we've got various gaps to fill if you're a gap trader. I don't tend to put too much weight on them, but I do think that if we do break down, we're going to see a move down here to about 122, because this is a support level. We We've got another level right here at about 116.50. And then we, of course, have a few different levels going down into that. But definitely we do have some demand that was created right there on that break of 100. Of course, it wasn't 100 back at the time because Apple went through a split. And it just happened to be that we broke up going into that split, right? So that happened on August 31st, 2020. And we saw this big move up that started to happen right here on the end of July, 2020. All right, so that's Apple. Now, I was talking just a moment ago about positive divergence between the S&P 500 and Bitcoin. So let's look at Bitcoin. Let me pull up Bitcoin. I'm going to use Bitfinex because I probably don't have anything on here. All right, so this is on the daily chart. So we created a low all the way back here on June 18th. And then we created a higher low back there on August 13th. All right, so we created a higher low on Bitcoin. What did the S&P 500 do? Right, so this should be no surprise. Actually, I'm going to go ahead and go back to the ES chart. What did we do here, right? So, of course, you know, a low here. And it's not the exact same day. But here on October 13th, you know, the S&P 500 created a new low. Bitcoin created a higher low. So how does that work out? That an asset that is so risky did not create a new low when the S&P 500, which is, you know, from a risk perspective, it's not a risk asset, right? The stock market shouldn't be considered a risky investment vehicle. It created a new low. Bitcoin did not. You know, in my opinion, Bitcoin should have created a more significant low, but it didn't. It did not. So with that, with Bitcoin creating a higher low, although, you know, we did short at about, I don't remember, it was like $21,150. We've closed that out already. We are starting to see some bearish divergence here on the daily, but I do have to admit that crypto has been much more resilient compared to the S&P 500 basically since June. Now, the S&P 500, when it had its big move up, right, it had its big move up throughout July and the beginning of August, right, it went a lot higher, but it has obviously come down and created a lower low. So if you want to compare the two, this dotted orange line is basically what the S&P 500 did, where Bitcoin has just kind of just been hanging out. It looks like it's in a really, really strong accumulation phase. And these are the kinds of things that I like to look for. So what I would like to see, this is what I would like to see. I would like to see the S&P 500 make a new low. And at the same time, I would actually like to see Bitcoin make a new low. And if we do that, I'm interested in buying below 18,000. I'm going to say something that I have said before, and I'm going to say again. Right now, at this point in time, using spot, right? So I'm not talking about leverage here. In 3-4 years from now, it's not going to matter if you bought Bitcoin at $20,000. It's not going to matter if you bought it at $18,000. You know, I'm not saying to, you know, go and mortgage your house. I think that's stupid. I don't think it's wise to go and get a loan. I think that's stupid as well. I don't think it's wise to, you know, borrow on a home equity line of credit for anything like this. That's a really stupid thing to do. But if you have disposable income that you're looking to put somewhere for an extended period of time, I think cryptocurrencies, excuse me, I think cryptocurrencies are likely going to outperform the stock market in the coming years, right? I'm not talking about next month. I'm not talking about January. I'm not even talking about what I expect to be a decent run into April of next year. I'm talking about long term. Watch the US dollar index. When the US dollar index, excuse me, when the US dollar index hits 120, right? And we're at about 110 right now. It's kind of moving down. It looks like it's in a little bit of a correction phase. Something that I teach all of my people is the first thing you should look for is some kind of a correction. And right here, clear as day, we have a nice ABC correction right there, right? You can see this, right? We have a nice correction. And we look like we have a little bit of an up, doing a pullback. More than likely, this thing is going to turn around and move to the upside. What's that going to be fueled by? I don't know. I don't care what it's fueled by. I'm going to be looking for a move up to 120. Once we see that move up to 120, and maybe it happens by the end of the year, I'm a buyer. I'm a buyer of crypto. I'm a buyer of stocks. I'm a buyer of really anything that I can get my hands on once the US dollar index gets up there. Because what's going to end up happening, this is going to drive down. Once it drives down, what's going to happen with stock prices? What's going to happen with crypto? Well, as the US dollar is devalued, your assets are going to appreciate in value. And that has been proven time and time again. And I mean, who knows? Maybe this time is different. But more than likely, it's probably not. Once the US dollar index starts to really start a decent move down and not looking corrective, right? Because again, this is very corrective, right? Any Elliott wave theory person will tell you that this looks corrective. This does not look like a 1-2-1-2, right? This is a clear ABC pattern. We don't have really bullish divergence right here to pay attention to. We don't have any bearish divergence to pay attention to. So I believe that we are going to continue to move in the trend, which is going to be to move up, right? But going into the end of the year, I do think we're going to see the US dollar index go up in value, which is going to cause assets to go down in value. And from there, once the US dollar index hits that price that I'm expecting it to get to, or that point, rather, not the price, but right up here at about 120, somewhere around there, I'm going to be looking to start buying and accumulating, because I think that's going to be the area where we're going to start to see a significant pivot. And I do think that when we do get there, it's probably going to happen very fast. We're going to move up there quickly. It's going to cause a capitulation in the market, and then we're going to see a pivot, and we're going to start to see, prices of our assets to start to move back up. And things are going to go, quote unquote, back to normal, which is not going to be the case, because I do think that we are going to be in a significant we are going to be in a significant bear market over, the next couple of years with the S&P 500. I do think that Bitcoin is going to be slightly different, right? We've already shown the resilience, and I think that's going to continue. But when we do see the prices start to appreciate, I think Bitcoin is going to move faster and higher than, from a percentage standpoint, than our S&P 500, NASDAQ, heck, even Dow Jones, which has been doing really, really great over the last few trading days. Okay, well, I've been going for about 22 minutes here, so I'm going to go ahead and end the video. I think I've covered everything that I wanted to cover, but just to recap really quickly. On the S&P 500, I'm looking for this to be our bearish control level. If we stay below this, which is at about 39.28 on futures, it's going to be about 39.10, 39.15 on the S&P 500 cash index. I do think that the bears are in control, and I think we're going to see continued move to the downside. All right, and I guess that's what I've got for you. If you need access to our trading room, you can find all that information on BitDoctor.org if you want access to our education, Elliott wave theory, education, trade ideas, both equity and options. We do trade options, but we do it much more conservatively than we do on our equity. And of course, we do some spreads. So if you're interested in debit spreads, we don't really do credit spreads, but if you're interested in debit spreads, we do all of that in there as well. And if you need access to our newsletter, you can find that information on BitDoctor.org as well. And if you need to get in touch with me, if you're not on our Discord and you want to get in touch with me, you can find me on Twitter. I'm BitDoctor on Twitter, so you can get a hold of me there. And of course, last but not least, wherever you are in the world, I hope you're having a good day, good night, and a good evening. Take care, everyone.